So let's start with the Augusta Rule. Can you explain to us what is it and why is it such a powerful strategy for business owners?
Yeah, the Augusta Rule, in my experience, there's a lot of accountants out there that are afraid to use this strategy, but it's completely legal. And if you document it correctly, it's a great strategy. It's the best way to take money out of your business. It's a tax free distribution to you, as well as a deduction to the business. And the way this works is as a business owner, you're allowed to have business meetings and you also are allowed to rent your home for 14 days or less during the year. When it's 14 days or less during the year, you don't have to report that to the IRS. And uh, so, what we do is your business rents your home just as if you were going to go to an Airbnb and rent the Airbnb as an office space and host a meeting there. You rent your own home for 14 days out of the year, and we do a fair market value rental rate, and so you pay yourself 14 different uh, rental days out of the year, and it creates a large deduction. And you know, the nicer the area you're in, the better the rental rate we can justify. And it's a tax-free way to take money out of your business, and it creates a big deduction for people. And that strategy alone saves I'd say the average person maybe $5,000 to $6,000, and that's just one of the strategies that we offer.
Thank you so much for explaining that. So, what are the requirements to qualify for it? Are there any?
Yes, so you have to be an S corp, uh, and we usually want you to uh, have maybe a spouse that's involved in the business. That's not really a requirement, but it's better documentation if you already talked to your spouse about work in your own home. You are completely eligible for this. In fact, I think you should be doing this because you're already talking about work with your spouse at your home. You're just not documenting it as a business meeting, and you could be. Uh, the requirement, yeah. So you have to be an S corp, and um, yeah, almost anyone can do it. I mean, you just have to have a home and um, have an S corp, and then you can also, even if you have multiple residences, you can do an Augusta rule on your second residence as well. So, you can almost double up that deduction and say maybe 10,000 or 12,000 using your two homes.
Is there any documentation that someone needs to properly support this strategy in case of an audit?
Yeah, so the IRS has audited the Augusta rule a couple times, and what we've learned from those cases is uh, it has to be a fair market value rate. Um, so if a business owner came to you and wanted to rent your home one day for a business meeting, they just loved your home and wanted to use it. It have to be a rate that you would reasonably pay. It can't be, you know, you can't charge $4,000 a day for your studio apartment or something. It has to be something reasonable that you would pay uh, somebody just to rent out your home for a day.